with us today who have registered for a webinar on the economic substance regulations. And I think it's still a topic that raises a lot of questions with UAE businesses. My name is Niels van Hassel. I'm a counsel at Aurifer Middle East. I'm a tax lawyer by profession, although I haven't seen the inside of a courtroom in a couple of years now. Some of you may be familiar with our firm, but for those who don't, Aurifer basically specializes in all things that are tax related in the GCC, and our firm offers both tax advisory and tax compliance services. I want to start off by saying that there's been a lot of changes in the tax landscape in the UAE recently, but also in the wider GCC region. First of all, we have a potential implementation of VAT that seems to be on the horizon in Qatar and Kuwait in the very near future. And then a few weeks back, Bahrain announced that it would increase the VAT rate from 5 to 10%, something that was now also formally approved by the parliament a few days ago. This increase will take effect as from the 1st of January of next year. Then not a week goes by without the tax authorities in the UAE or in Saudi publishing new guidance on a particular topic. And this is something that is obviously a positive thing because for tax professionals, more guidance means more clarity. And in the UAE, we recently saw some changes in the VAT legislation a few months back. The penalty regime was completely overhauled for VAT and excise taxes, which was very welcomed by businesses in the UAE. And more recently, we saw some changes in the tax procedure law as well, and some changes in the rules with regards to supplies within designated zones. So the tax authorities, they stay active. And then at the global level, more than 136 countries signed an OECD deal that will introduce a global minimum corporate tax rate of 15%. It goes without saying that the implementation of a global minimum tax will have its effects on tax-free jurisdictions such as the UAE and Bahrain, with some people even saying that corporate income tax will surely come by 2023 to the UAE. So if you look at these changes, I think it's fair to say that it's a challenging, but also an interesting time to be a tax professional in the Middle East and in particular in the GCC region. But with all these changes, we should of course not forget our recurring tax obligations. As we have mentioned on the invitation for this webinar, December has arrived, and that means that for a lot of businesses in the UAE, it's once again ESR filing season. A large number of businesses will have to submit their ESR reports by the 31st of December. And for most businesses, this will also be the second round of ESR filing. So the goal of today's session is to have a quick recap of the ESR basics, and then also to have a look at the lessons that we've learned from last year's ESR filing. So what, for example, are some of the common reporting errors? We also see that the FTA has started auditing certain ESR submissions. Some people may have initially thought that the UAE would never strongly enforce the economic substance regulations, but it turns out that this is absolutely not the case. We've seen some businesses that have already incurred penalties, and we'll have a look at also the options that you have in case penalties are imposed. What are the appeal procedures? So that is, in a nutshell, what we are going to see in today's session. I should also not forget to mention that this session is being recorded and will be available for viewing on our YouTube channel, which is Aurifer Middle East Tax. If you Google that, you'll surely find that easily. So if you have any colleagues or friends who might be interested in ESR, there's probably not a lot of them, but feel free to send them the link when the video is available on YouTube. One more thing before we start, if you have any questions during the webinar, feel free to go ahead and raise those through the chat. I'll do my best to answer them as we go. However, since we have a large number of attendees today, in order to stay within the time that we've foreseen, I may keep your question until the very end of the webinar, where we have allocated some time also for Q&A. So without further delay, let's have a look at today's agenda. So as I've mentioned, we'll start off with a brief recap of what I call the ESR basics. Why was it introduced? What is the concept of a licensee? What are the different relevant activities that can put you in scope of ESR? What are some of the ESR exemptions that potentially you can claim? And there I will particularly focus on the branch exemption, as that seems to be the one that's most commonly claimed in practice. We'll then close off the first part by having a closer look at the substance requirements, which is also known as the economic substance test. And in the second part of our webinar, we'll have a closer look at the actual ESR obligations. What are the procedures? What do you need to do to file? Which information do you need to submit as part of the notification on the one hand, and then also the ESR report? In the third part, then, we'll discuss the appeal procedures. So what are the steps that you can take if you have incurred the penalty? Can you appeal with the FTA? How do you do that? Which documents do you need to provide? Next, we'll talk a bit about the recent ESR audits as well. What can you expect if the FTA announces that they will conduct an audit for a specific licensee? What are the documents that are usually requested? As part of the audit process, we'll have a thorough look at those as well. Then also we'll do a deep dive on the interactions that you may have with the regulatory authority as part of your reporting obligations. And then in the last part of the webinar, I'll discuss some of the more common ESR reporting errors. Finally, I'll then close off with some Q&A, as I mentioned. So if you have any questions that are not related to the topics that we're discussing on the slides, then feel free to raise those, and then we can have a look at that towards the end of the webinar. So let's start with a bit of a background of why ESR was introduced. Because to understand ESR, we need to understand why it was implemented. So as you may know, the UAE has historically been labeled a tax haven, not only due to the lack of a federal corporate income tax system, but also due to a lack of transparency in terms of the exchange of information. And the lack of taxation for UAE businesses, that was considered to be harmful for the tax base of other jurisdictions. And this is one of the reasons why the UAE was on the European blacklist until the 10th of October 2019. Now, the consequences of being blacklisted, that varied for each EU member state. But one example is the application of increased withholding tax rates on outbound payments from the EU to companies that are in a jurisdiction that is on the EU blacklist. So one of the ways to get removed from the list is by increasing transparency. So in order to get removed from the EU blacklist, the UAE decided to implement economic substance regulations in 2019. A second reason for the introduction of ESR is the fact that the UAE is a member of the so-called inclusive framework. The inclusive framework, or the IF, that refers to a group of jurisdictions that have committed to implementing the OECD's minimum standards under the BEPS project. BEPS stands for base erosion and profit shifting, and as the name suggests, it aims to combat artificial shifting of profits, especially in regards to highly mobile business activities. And that is exactly what the economic substance regulations aim to combat. So now that we know why ESR was implemented, you may ask yourself the question, what are the economic substance regulations? ESR, the regulations are essentially a set of rules that require businesses to have a certain degree of substance in order to demonstrate that their presence in the UAE is not purely for tax optimization reasons, but that it goes beyond that. So substance in itself, it's a vague term, but in a broad sense, it refers to companies conducting their activities local, having sufficient assets, employees, local decision-making, and local expenditure to root it or anchor it within the jurisdiction in which they are incorporated. And I can best illustrate that kind of practice that the ESR rules try to target with an example. Let's say you have a multinational group has developed an intellectual property asset. The IP was developed in the US, but was then subsequently sold to the UAE, to a company established in the UAE. So in the next step, what would usually happen is that the UAE company licenses that IP to companies all over the world. Now, that has two effects. One being that it generates income in the UAE, which usually remains untaxed. Second of all, it creates a deduction in the other jurisdictions that have to pay royalties for the use of the IP. But this is obviously an overly simplified example, but it is regarded as artificial shifting of profits. And why is it artificial? Because at first sight, there's no underlying economic reason, no specific business purpose as to why you would place the IP in the UAE, other than for reasons of tax optimization. And these kind of situations is what the ESR tend to target and to combat. So when we look at when ESR was implemented, we see that there was actually two sets of rules. So initially, ESR was implemented on the 30th of April 2019, and it applied retroactively as to the 1st of January 2019. So basically, your first reportable period was financial year 2019. Now, shortly after the implementation, there was a review conducted by the OECD, and there was one significant amendment to this first set of rules, which had to do with the exemption for government-owned entities. Initially, under the original rules, all entities that were at least partly owned by governments were exempt from the economic substance regulations. But the OECD found that such an exemption was too broad, and therefore the threshold was actually increased to 51%. So only companies that were held for at least 51% by a UAE government, those would be exempt from the ESR regulations. Keep in mind, this was under the old regulations. In August 2020 then, the UAE repealed and replaced the initial ESR legislative framework by publishing a new cabinet decision and a ministerial decision. Both also applied retroactively as from the 1st of January 2019. I've included here also some of the most notable changes that came with the second set of ESR regulations. There were changes to the concept of licensee, which amongst others had an impact on the scope of ESR in terms of which entities could be considered as being in scope of the regulations. The new rules also introduced new ESR exemptions. Initially, there was also only the exemption for government entities. Now we have 5 categories of ESR exemptions that we'll discuss as well later in the webinar. There were some small changes as well to the scope of the relevant activities, in particular the distribution and service center activity and the headquarters and IP business. There were also some changes to the treatment of branches and different treatment for branches of local entities versus branches of foreign entities. One of the more important changes was that the Federal Tax Authority was appointed as the National Assessing Authority to police and monitor the implementation of the economic substance regulation. The functions of the Ministry of Finance and the regulatory authorities, they were also changed. The Ministry of Finance basically oversees the entire process and is also responsible for exchange of information with foreign jurisdictions. For example, in case a licensee does not meet the economic substance test. The roles of the regulatory authorities, they were in a way reduced, although they still play a significant role. And one of the more significant changes as well was that the launch of the ESR portal. So basically, the ESR notification and the ESR reports, they now have to be filed through the online portal, which was launched by the Ministry of Finance. Whereas previously, under the old regulation, each regulatory authority had its own procedure. You could either submit it via email. Some free zones also incorporated the portal. But all those submissions were then basically nullified when the ESR portal was launched. And then finally, there was also a new penalty framework, which significantly increased the penalties for non-compliance. But we'll also have a look at those later in the webinar. So after this short introduction, let's move on to some of the ESR basics. It's important, first of all, to understand which entities are in scope of the ESR. And as a basic principle, the ESR regulations, they apply to the fullest extent to licensees that carry out a relevant activity and derive income from that relevant activity. So if you check these three boxes, namely being a licensee, carrying out relevant activity and deriving income from that, then you will have to meet economic substance requirements and comply with all ESR reporting obligations, which means that you'll have to file an ESR notification and also an ESR report. The only exception to this principle is if you can claim one of the ESR exemptions. So let's say that you are a licensee and you carry out a relevant activity, but you do not generate any income from that activity. Well, in that case, you will only have very limited obligations under the regulations. In other words, these types of entities that are not fully in scope of the ESR regulations, they will not have to file an ESR report. They will not have to demonstrate that they meet minimum substance levels. And a common example of such an entity that would be a rep office, because it's generally considered that they do in some form of way conduct a relevant activity, but obviously they do not receive any income as they are prevented from making any sales within the UAE. So let us have a closer look at the concept of a licensee. Under the new rules, a licensee is a legal entity, a legal person, which is incorporated inside or outside of the UAE, or an unincorporated partnership that is registered within the UAE. So note that all UAE entities may in principle qualify as a licensee, whether they're incorporated in mainland, in a free zone, or in one of the financial free zones, which are the DIFC and ADGM. Some entities are considered to be excluded from the concept of licensee. This was a change that came about under the ESR 2.0 regulations. So who is excluded? We have natural persons, so individuals are no longer in scope of ESR, sole proprietorships, trusts, and foundations. So these four categories, they are never considered to be in scope of ESR and are not required to meet the substance requirements. So this new licensee definition, as you can see, it's in stark contrast with the concept of licensee under the old regulations, where anyone who's licensed was considered a licensee, which was obviously a much broader definition. So under the new rules, in a way, the scope of ESR was reduced significantly. Let's move on then to the relevant activities. So on this slide, you can see an overview of the 9 relevant activities. Some, as I mentioned, have undergone slight changes in the scope under the new legislation. I've highlighted those by putting essentially a white box around them. So I'm talking about headquarters, IP businesses, and distribution and service centers. So those underwent small changes in their scope. In terms of the relevant activities, so starting on the top left, we have banking, which is characterized by accepting deposits and then making loans or investments on account of the licensee himself. We have insurance business, which revolves around accepting risks in exchange for the payment of insurance premiums, investment fund management, providing investment services to either local or foreign funds. We have lease finance business, which is very common. Basically, you are considered a lease finance business whenever you provide or offer a form of credit or financing for consideration. So I'm talking about loans, financial leasing. Then we also have headquarter business, which basically revolves around providing senior management functions to group entities or assuming risk on behalf of related group entities as well. Shipping business, whenever you're operating ships from the UAE, could be considered in scope of this activity. Holding company business, it's a bit of a special case for ESR purposes. You're only considered a holding company if your sole function is holding shares or equitable interests, and your only income is received from dividends or capital gains. So whenever you step outside the boundaries of these two conditions, you're no longer considered a holding company for ESR purposes. which is relevant because for holding company, there's reduced substance requirements. Then we also have IP business. So any business that exploits or receives income from any IP assets that it holds is considered an IP business. Within that category, we also have the high-risk IP businesses. So if you meet certain requirements, you could be considered high risk, which, contrary to the holding company, comes with increased substance requirements, which we'll talk about in a minute as well. And then finally, we have the distribution and service center category, which are basically two relevant activities grouped under one umbrella. So you're considered a distribution center if you purchase materials or goods from related parties which are outside of the UAE and then resell them either to group entities or to third parties. That doesn't matter. So for example, if you're a UAE-based entity, you buy goods from China to be sold in Europe, then you would be considered a distribution center. Then service center, to close off the relevant activities, basically exists whenever you're providing services to related parties outside of the UAE. So any UAE entity that performs any kind of services to group entities outside of the UAE, those would be considered a service center. So you can already imagine that this is a very common relevant activity, actually. As I mentioned, for holding companies, we have reduced substance requirements. So basically, holding companies, they only need to demonstrate that they comply with all UAE regulations and that they have adequate employees and premises/assets to carry out the holding company business. High-risk IP businesses, as I mentioned, are subject to stricter rules, which is why I've put a red box around the IP businesses, because by default, they are considered to not meet the economic substance test, and they will need to demonstrate that they meet the so-called DEMPE criteria in respect of every IP asset that they own. And DEMPE stands for development, exploitation, maintenance, protection, and enhancement of the IP. So if they meet those conditions in respect of their intellectual property, they can also meet the economic substance test, but there's a presumption by default that they do not meet that test. Then there's 5 categories of exempt licensees under the new regulation. As you can see in the top right, before there was only one for entities that were government held for more than 51%. So the first type, and I think the most relevant in practice, is the branch of a foreign entity whose income is subject to tax outside of the UAE. We call that the branch exemption. And you also have exemptions for investment funds and entities that are tax resident outside of the UAE. So the 2 exemptions that we'll go into more detail on are the branch exemption and the tax residence outside of the UAE, because we see those the most in practice. And we also have an exemption for what we call LELO entities, local entities that are locally owned and operate purely within the UAE. So you can already see the rationale behind this exemption. If there is no multinational group, there's no interactions with other jurisdictions, then there's also no risk of artificially shifting profits, which explained why this exemption was introduced. And then finally, there's also theoretically the possibility to get an exemption by the Ministry of Finance, but we at Aurifer, we don't have any knowledge about any of these type of exemptions already being granted. But it is the prerogative of the Ministry of Finance to essentially put certain licensees outside the scope of ESR. Then on the branch exemption, so if you're a UAE branch of a foreign entity, you can theoretically claim a branch exemption, provided that your income is subject to tax in another jurisdiction. Now, the Ministry of Finance has actually clarified that this subject to tax criterion, that it is met as long as the income of the UAE branch is taken into account when calculating the taxable income in the jurisdiction of the parent entity or the head office. So if the income is reported in the foreign tax return, in principle, you are eligible for this exemption. even if that income is not effectively subject to tax in practice. So which documents do you need to provide to evidence your exempt status? Because as a more broader principle, whenever you try to claim an exemption, you have to substantiate that. So effectively, your exemption is claimed by filing an ESR notification, but you also have to provide the necessary evidence in support of that claim. So specifically for the branch exemption, there are two things. There's the copy of a tax return or the CIT assessment for the relevant period. So I say for the relevant period because the problem that we sometimes see in practice, the problem that you can run into is that depending on your accounting period, it's possible that there's no tax return that has been filed yet for the financial year that you're reporting for in the foreign jurisdiction. For example, if you want to claim an ESR exemption for financial year 2020, then in principle, you also need to submit a tax return for that period that was submitted in the other jurisdiction. But depending on the rules and the deadlines for the submission of those tax returns, it could be that a CIT return would only be due next year, for example, whereas you already have to file for an exemption towards the end of this year. So that provides for a practical problem in actually claiming the exemption. Now, there are ways that you can go around that. And if you want to know more about that, feel free to contact me after the webinar. Another scenario in which you can claim an ESR exemption is where you are a tax resident outside of the UAE. Whether or not you'll succeed in claiming this exemption will therefore largely depend on the tax residency criteria of that other jurisdiction. For example, if you're a UAE company, but your effective place of management is in another jurisdiction, it is possible under local tax rules that that jurisdiction will consider the UAE entity a tax resident abroad and therefore subject all its income to tax in that other jurisdiction. The Ministry of Finance has also clarified that it's not sufficient, for example, to pay withholding tax on your income to claim this exemption. The income needs to be subject to formal corporate income tax, or your income will not be considered to be subject to tax at all. Again, you may encounter some difficulties with certifying that the entity is a tax resident in the foreign jurisdiction, either due to the unwillingness of the local tax authorities to certify that you're indeed a tax resident abroad, or because of certain language issues. That's something that we've also seen in practice. So as you know, all documents that are provided for ESR purposes, they must be in English. But of course, some countries, they only provide these kind of attestations or certifications in their national language, which then poses a problem. Of course, legal translations are an option there. One more thing that you should know before we move on to the next section is that whenever you claim an EXR exemption, it's possible that the regulatory authority will deny that exempt status. The question then is what happens? Will you incur late payment penalties? And in that regard, luckily, the Ministry of Finance has clarified that if your exempt status is denied, you will essentially be given 30 days to submit your ESR report, because that's going to be the consequence. If you're not exempt, you need to do two things. You need to demonstrate that you have minimum level of substance. And second of all, you will have to file an ESR report. However, they also note that businesses that willfully, knowingly, and intentionally submit improper exemption claims, they will be penalized. So if you're trying to get out of your ESR reporting obligations by claiming exemption, please don't do that because you will incur penalties if there's absolutely no evidence that you are that you can file within one of these exempt categories. So if you cannot claim one of the exemptions, then you'll need to meet the economic substance test. So let's have a closer look at what precisely that entails for UAE businesses. Before we take a deep dive into the actual economic substance test, let's remember first the purpose of the economic substance regulations, which is to prevent companies from shifting highly mobile business activities to low or no income tax jurisdictions. And the way that the regulations try to achieve this is by essentially mandating a minimum level of substance. So as I mentioned, substance, very vague term by itself, but essentially it means that an entity is locally rooted or locally anchored within a certain jurisdiction. It means that it adds value in a way to the local economy and that it goes beyond being a mere letterbox company. So as you can see here on the slide, there's 5 criteria that need to be met to pass the economic substance test. And the first one entails that your core income generating activities, or SIGA, must be conducted in the UAE. SIGA essentially referred to the core of your business activity, the central activity that generates gross income for a licensee. This means that it's not required that all your business activity is conducted within the UAE, and it allows, for example, for non-income generating activities such as IT functions, accounting, other support functions, that those can be outsourced by a licensee, and it can even be outsourced somewhere outside of the UAE. But in practice, we don't usually see any problems with this test, namely that your activities have to be conducted locally, because by practice or by nature, it's usually evident whether a company is operating locally or not. This is a bit different when we talk about the directed and managed test. According to the substance regulations, you need to have local decision-making in the UAE. Now, what does that mean? It means that your board meetings need to be held in the UAE and a quorum needs to be met during those meetings. Mind you, not all board meetings have to be in the UAE, but an adequate number. So it allows licensees to essentially also have a few board meetings outside of the UAE. In addition, all strategic decisions in relation to the relevant activity must be taken in the UAE in order to meet the directed and managed test. The legislation does not specify what constitutes a strategic decision, but I think it's fair to assume that a strategic decision goes beyond any sort of decisions regarding day-to-day management or operations. The regulations also specify that directors need to have the necessary knowledge and expertise to carry out their duties. But let me tell you, amongst all the clients that we've worked with, we've had exactly 0 directors who thought that they didn't meet this criterion. So again, not much of a problem in practice. The law further specifies that it's not required that directors are residents in the UAE. They just need to be physically present when they take their strategic decisions. And regarding this requirement, the Ministry of Finance has actually published a notice which states that exceptions to this rule are possible if a director is prevented from traveling to the UAE due to COVID-19 restrictions. They've also further specified in that same notice that this relaxation will continue to be applicable as long as there are travel restrictions due to the pandemic. So I would say for financial year 2020, if you have some issues with whether or not the directed or managed test is met, because, for example, certain directors were unable to come due to being in quarantine, due to travel restrictions, have a look at this COVID-19 notice, as it may help you to still meet the economic substance test for financial year 2020. So that's so far the material conditions for the directed and managed test, but there's also a formal angle to this, which means that all decisions need to be documented in writing, and they need to be documented essentially in meeting minutes. And these minutes, they need to be signed by all directors that are physically present in the UAE when they take the management decision. And the minutes also have to be kept or stored in the UAE. And this is where we usually see problems arise in practice. So we really urge our clients to put in place the necessary procedures to sort of produce these formal meeting minutes. In case of a tax audit, or rather an ESR audit, it's very likely that the FTA would ask for a copy of the meeting minutes. Luckily, you don't have to provide them as part of the standard information. Obviously, there's also a confidentiality angle to providing meeting minutes, but the Ministry of Finance has essentially also published a policy which states that any documents that are provided as part of the ESR reporting will be treated as confidential. And maybe a final note on the directed and managed tests. All these rules, or these requirements rather, they seem to be tailored for companies that have a board of directors, but obviously that's not always the case in practice. So where there's no board of directors, the law actually specified that this directed and managed criteria will have to be assessed in respect of the shareholders, the owners, or the general manager or CEO. So where there's only one person who's taking strategic decisions, all these criteria will have to be assessed in respect of this person. And the third prong of the economic substance test requires you to have an adequate number of employees. The Ministry of Finance has actually provided detailed guidance on how to calculate your FTEs for ESR purposes. But in short, it comes down to the fact that one full-time employee is someone who works a 40-hour work week and throughout the entire reportable period, so 52 weeks essentially. You can also rely on outsourcing to meet this specific requirements to have adequate full-time employees. For example, you can hire a manpower company to provide employees where necessary. Sometimes you also see in practice that related group entities provide employees who also perform functions for a licensee, for example. So again, when you enter into an outsourcing arrangement with these kind of third-party or related group entities, that's also a possibility to meet the economic substance test. Then the fourth and the fifth test, they dictate that you need to incur a sufficient amount of operational expenditure and that you need to have adequate physical assets or premises. Now, a question that we regularly get in this regard is what is considered adequate or sufficient? And then unfortunately, I have to answer in a very typical lawyer fashion that it depends. It depends mainly on the level and the type of business activity that is conducted by the licensee. So unfortunately, for people who wanted me to say a specific number, I'll have to disappoint you. There are no hard or fast rules around what is considered adequate. In its guidance, the Ministry of Finance has stated that it's not the intention to force businesses to essentially hire additional personnel, and that the FTA will also take a pragmatic approach when they're assessing the substance level of licensees, and that they will take into account also the fact that activity levels, they may vary between reportable periods. And then a quick note also on the automatic exchange of information, because this is something that is often overlooked as one of the consequences or one of the mechanisms also behind the substance regulations, because at the end of the day, ESR is all about transparency and exchange of information with other jurisdictions. So I've listed here the occasions, let's say, where there is an exchange of information. So for example, if you don't meet the economic substance test, the FTA will inform the Ministry of Finance thereof. And as a result, the Ministry of Finance will exchange your information with other jurisdictions where either your parent entity, your ultimate parent entity, or ultimate beneficial owner is located. There's also, as I mentioned, high-risk IP licensees. There's an automatic exchange there. So even if you meet the substance test, there will still be an exchange of information. The same with entities claiming the exemptions that we've discussed earlier. So if you claim the branch exemption or you claim to be tax resident outside of the UAE, there will also be an exchange of information. And why is that? Specifically to create a waterproof method of verifying that these exemptions are indeed granted correctly. Because by doing this, they make it very difficult to claim an exemption where the conditions are not met, because foreign tax authorities, they would find out that you've claimed an ESR exemption in the UAE, and they would verify that as well. Then on to ESR reporting and different obligations. As I mentioned earlier, there's different degrees in which the substance regulations can apply to different entities. It's not merely a matter of being outside or inside the scope. It's not a black and white matter. So in this table, I've listed 5 different categories, and for each category, I've indicated the ESR requirements. So first of all, if you're not a licensee, for example, you're an individual or a trust or foundation, then whatever your activity is will not be in scope of the regulations. So this is the first category, no requirements under the substance regulations. If you are a licensee, so you have legal personality and you operate in the UAE, that's all irrelevant unless you carry out one of those 9 relevant activities. If that's not the case, then you're still considered fully outside the scope of ESR. Where it becomes interesting is where a licensee carries out a relevant activity but does not generate any income from that activity. And such entities, as I mentioned earlier, they're only required to file an ESR notification. Similarly, if you're eligible to claim an exemption, and you only need to file a notification in which you then substantiate that you are eligible for that exemption, and you also provide supporting evidence of that. And then finally, licensees that carry out a relevant activity and derive relevant income, those are fully in scope of the substance regulations. They will not only have to submit a notification and an ESR report, but they will also have to meet minimum substance levels. Then a note also on the timelines, because initially there was a lot of confusion about that, but the reporting deadlines are now quite easy and straightforward, I would say. You may remember that last year there were some exceptional reporting deadlines for financial year 2019. Initially, it was 31st of December, but it was pushed back with 1 month until the end of January. I would say we're now completely past that, and essentially you'll have to file your ESR notification within 6 months following the end of the reportable period. So for financial year 2020, that means that your notification should have been submitted by 30th of June of this year. In terms of the ESR reports, the deadline for that is within 12 months following the end of the reportable period. So I guess most of you already know that, otherwise you would probably not be in this session. But if your financial year ends 31st of December, then for financial year 2020, we'll have to file by the end of this month. There's one question here from Nena. Would a company that carries out a relevant activity but does not derive income have to file a notification every year? Yes, that's correct. So you would have to file every year. It's a recurring obligation, so it's not a one-off. So still you'll have that recurring element, because of course, if you look at it from the authorities' perspective, it could be that those situations change from year to year. It could be that during a certain year you don't have any activity and you didn't receive any income, but then the next year, for example, the business starts attracting a lot of customers again, and then suddenly you do have income. So it is in fact a yearly obligation. Then the consequences of non-compliance. I talked about the penalty framework under the new rules, that it was actually increased significantly. So I've listed here what happens in case of non-compliance. So first of all, there's a 20,000 dirham penalty for not submitting an ESR notification. There's a 50,000 penalty for not submitting the ESR report or not meeting the tests, in which case there will always also be an exchange of information, as we discussed previously. There's another penalty of 50,000 dirhams in case of providing inaccurate information to the authorities, again, going hand in hand with an exchange of information. And then last but not least, there's a whopping penalty of 400,000 dirhams in case of not submitting the ESR report or not meeting the economic substance test for consecutive years. Again, there will be an exchange of information in this case. So if you haven't met the economic substance test during a particular year, please put everything in place, add substance, make sure that you comply with your reporting obligations to prevent that consecutive period of non-compliance, because that's really where that heavy penalty of 400,000 dirhams will hit you. And as I mentioned, the FTA is really looking into the substance now. So if you, I mean, now it's already very close to the reporting deadline, but also for 2021, you have to consider, do we still need to hold board meetings in the UAE, yes or not, to meet the economic substance test? I see that there's a few questions, so I'll just have a look at those. Do the timelines change if the financial year is not the calendar year? This is a question asked by Sigurd. Yes, they do. So for example, if your financial year ends on 30th of June, then again, 6 months would put you at the end of December to file your notification. And then on 30th of June of the next year, you'd have to file your report. So essentially you look at when is my financial year ending? And then each time you take 6 months and 12 months to determine when you have to file the notification and when you have to file the report. Then need to ask the question, if a company liquidated in 2021, November, so very recently, do I have to file a return for 2020? Absolutely you do for 2020, and I'll tell you more, for 2021, you'll also have to file a report still, because there was still activity in 2021, so don't forget to file next year as well. Then Seema asked, if a company is a subsidiary where the parent company is outside of the UAE, will it need to file an ESR report? This is not a branch and this company maintains separate books in the UAE. Well, it's not enough information to know whether they would be in scope, Seema, but in any case, you would not be able to claim the branch exemption and most likely also not any other exemption. So if you do indeed carry out a relevant activity, for example, if the subsidiary provides services to the parent entity, then you are in scope and you will have to file an economic substance report. Rami, I'm not sure what your question relates to. Just need to know, what do you mean by we had to help meetings? Well, for example, that probably relates to the point that I was mentioning earlier. Let's say for 2021, let's say for 2020, you didn't meet the economic substance test, then you need to put everything in place to meet the substance test for 2021. Otherwise, you'll have consecutive periods where you didn't meet the test. So for example, if in 2020 your directed and managed test was not met because you didn't have board meetings in the UAE, then you need to do everything now that you can still do to put in place a board meeting before the end of the year so that you meet the substance requirements. That's what I meant with that. Okay. So we talked about the penalties. Before we move on, I'd like to say this sort of marks the end of the theoretical part of the session. So in the next part of the webinar, we'll take a bit of a more practical approach, and we'll go through the ESR notification and the report together to see which details need to be provided in which section and what kind of difficulties that you can encounter along the way. So as I mentioned initially, each sort of regulatory authority had its own way in which you had to submit the notification and the reports. But under the new regulations, all reporting needs to be done through the online portal of the Ministry of Finance, which also means that you must create an account on the e-services platform of the Ministry of Finance. One note also on that is we still see people that, for example, for JAFSA, that are still filing via email their ESR notification and their ESR reports. But obviously, this is the same as not filing, because the Ministry of Finance has very clearly published that all filings need to go through the portal. So if you're still filing to that email address of your regulatory authority, then you need to take corrective action very quickly, and you need to start filing through the Ministry of Finance portal. So it's the second round of ESR reporting. So I think most of you have already done this. Most of you probably already have an account. So I'll quickly go through it for those people who are still unfamiliar with it. So to create a user account, first you need to go to the website of the Ministry of Finance, which is maf.gov.ae, and then you can access the home page. And if we go or hover over strategic and international partnerships, you'll see a drop-down menu, and there you click on economic substance regulations, and that will bring you on this page. By the way, where you can also find all the guidance that's published by the Ministry of Finance is linked there. You can, for example, see the COVID-19 notice that I was talking about earlier. But here we need to click on create a new user. If you haven't created an account yet, if you do, then you can just log in and basically skip the next steps. Then you click login to the ESR portal. So to create the account, you need to enter an email address that is designated for the contact person who will be in charge of the ESR filings within your organization. You'll have to set a password, you have to provide a mobile number, and also the address details of that person. Then as a next step, you'll be requested to provide secret questions and answers as well. Once you've gone through these steps, you will get an email to activate the account. And there it's important that the link that you'll get from the Ministry of Finance is only valid for 24 hours. So if you fail to activate the account within those 24 hours, you'll have to go through the entire process again, basically. Okay. Then once you've created the account, you will come into the ESR portal once you log in. And the first thing that you'll see is the ESR dashboard. And there's an option to start filing an ESR notification. This is the first page that you'll see if you click on that button. So this is some general information about ESR, about the relevant activities and who's required to file a notification, basically everything that we've just discussed. And then finally, you'll come in the first section where you'll have to provide details. I don't think in practice this poses a lot of problems. The only thing that I would maybe mention is if you have a dual license, sometimes we see that companies in ADGM that also have a DED mainland license, you can provide that. And the first trade license is then the one that you've actually obtained first. So historically, what was your first license? If it was, for example, your DED license, you'll have to indicate that that is your primary license. Then you'll have to indicate whether you're a free zone company or a mainland company. Your legal form is another one where we sometimes see small issues because people either don't look at their trade license and they just say they're limited liability company, where, for example, they're a free zone company. Free zone companies are LLCs in a way, but you have to specify that. So you have to look at your legal form according to the trade license. You also have to indicate here whether you're registered for VAT and provide your TRN. I always give the tip to quickly check also on the website of the FTA. There's a tool where you can verify your TRN. So if you provide your TRN there, it will basically provide the name in English and Arabic of that entity as well. So it's a nice way to double check. Branch details then. So this is an important one. This section is not for branches of foreign entities. So it's essentially only for local branches of UAE head office entities. So essentially under the new rules, if you are an entity in the UAE and you have several branches, for example, in different emirates, what you can do is you only have to file one notification and one report, but you have to consolidate all your activities within that one consolidated report. So let's say you have two branches, you can click yes here, and then essentially you provide the details of the license by providing the regulatory authority and the license number, and they will automatically show up there. Don't use this section if you're a branch of a foreign entity, because those are considered to be separate from their head office. Then the reportable period, we've discussed the reporting deadlines or timelines rather. There's a quick recap of that here. But essentially, you'll have to provide the start and the end date of the reportable periods. Just note that I put 2021 here, but actually it would have made more sense if it would have been 1st Jan 2020 till 31st December 2020 as well. Then in the notification, the next section, you'll have to indicate which relevant activities does the licensee carry out. So you just check the box. In this case, we've taken a service center. So we said, yes, you carry out this relevant activity. Then the next drop-down menu is again an yes or no question where they ask, is your income subject to tax outside of the UAE? In this case, it's no. And then we've indicated our relevant authority as well as the DIFC. Then in this section, you can claim an ESR exemption if you want. For the time being, we've said no, but we'll have another example in a few slides where we'll go into more detail on that. And then finally, you also see the contact details of the designated contact person. Essentially, that's going to be the details of the person who has made the account. So this is basically the primary point of contact. If there's any correspondence from the regulatory authority, the FTA, or the Ministry of Finance, it will go to this person's email address. You also have to provide mobile phone there to allow them to contact you as well. And then finally, once you've completed all those forms, you check the box, you confirm and you acknowledge that the information that you provided is accurate and correct, and you can submit the ESR notification. What you'll get then is a sort of confirmation key, which you can use in case there's any technical difficulties. For example, your ESR notification, you submitted it and it doesn't show up. You can use this reference number to contact the ESR support help desk as well. So any kind of technical issues with the portal, don't go to the FTA because they won't be able to help you. You need to contact ESR support basically. Then I've also included a short example on claiming the branch exemption, but I see that there's a question here. Do sole establishment have to submit ESR? I think that person didn't pay a lot of attention in the beginning, so we said that sole establishment or proprietorships, they're outside the scope of ESR. They're not considered licensees. So even if you conduct a relevant activity, then you will not be in scope of the regulations. So when you claim the branch exemption, what you're going to do in the section where you indicate the relevant activities is, first of all, you're going to say, I do conduct, for example, a service center business. And then you're going to say under question 2C that your income is subject to tax outside of the UAE. And this will then allow you further down in the forms to claim the ESR exemption. So you're going to indicate yes, and then select the appropriate category of your exemption. And as I've mentioned, as part of the process, you also have to provide evidence that you indeed are an exempt licensee. In this case, it could be a corporate income tax assessment or a copy of the corporate income tax return that the head office submitted in the other jurisdiction. So in addition to that, you'll have to indicate what is the country of residence of the head office, or where did you claim tax residency. And if you have what we call a TIN, a tax identification number, you'll also have to provide that because it basically allows the Ministry of Finance to easily exchange that information with the foreign tax authorities, and they will quickly be able to identify whether or not that licensee is indeed a branch of a foreign entity and the income is reported in that other jurisdiction or not. Another consequence of claiming the exemption is that you're going to have to provide the ownership information, which means details of the parent entity, ultimate parent entity, and the ultimate beneficial owners. But I'll go into more detail on that when we go through the report later on. Okay, so here, for example, on the UBO, we've indicated that there is no UBO who holds more than 25%, but that there is a senior managing official. I'll talk a bit more about that when we go into the ESR report. So once you've submitted your notification, it will show up in the ESR portal. Usually it takes a couple of minutes. The closer we get to the filing deadline, the longer it usually takes for the system to process your submission. So it can take up to a day for your ESR notification to appear. So take that into account. If you want to file on the 31st of December, the portal is going to be very busy, potentially overloaded as well. And it might take a while for your ESR notification to show up. What you can do at that point is either contact ESR support, but usually it's not a good idea to submit the same notification again. And the Ministry of Finance, they have explicitly recommended against doing so because you're going to have duplicate submissions. And then you have to contact your regulatory authority to basically have them removed from the portal. Jovan, I do check the questions as long as they're relevant to what we're discussing. So I see there's one question here: what happens to the ESR exemption if an entity is tax resident outside of the UAE and also tax resident as per the UAE tax law? Whether the residency has to be decided by DTA between the two countries and then check for exemption. It's a very good question, but my question would be, on what basis, on which UAE tax law would it be a resident? Because there is currently no federal corporate income tax in the UAE. So I guess in that point, you would indeed fall back on potential tiebreaker rules that are in the relevant tax treaty. Then Sajid, he commented that during the notification filing, it skips section F. Could you please comment if this is a system glitch or something else? So it's not a glitch, Sajid. What happens is if you just file your notification and you do not claim an exemption, it will indeed skip the ownership information. Why? Because you have to submit the report anyway, in which they'll ask you for the same information again. This is different, as you've seen, when we claim the exemption. You do have to provide the ownership information. Why? Because there will be no report and there will be an exchange of information automatically, as we've seen earlier. Then here, as I mentioned, we've filed our notification and now we've clicked in the ESR dashboard that we want to file our ESR report. This is the first page that you're going to see. And then here you can just basically click next. Again, some general information on the relevant activities. And then once you've gone through all of that, you'll arrive again at section A, general information. Some of this information might already be pre-completed if you've submitted a notification before. Essentially, this information, most of it, you will find it either on your trade license or on your VAT registration certificate. So I will not talk too much about that. The only thing that is different compared to the ESR notification is that here under point 6, we have to provide the square footage of the offices or premises that are used by the licensee. One of the common errors that we see here is that people provide their the surface basically in square meters, whereas it asks for square footage. So don't forget to convert that appropriately. Again, the same question if you're registered for VAT, but then new questions are if you are part of a multinational group, which will, in most cases, the answer will be yes. And then also, if you're wholly owned by the UAE government, you have to indicate yes or no. I am not entirely sure why question 10 is asked, but I think it has to do potentially with one of the exemptions where it's a local entity that operates locally within the UAE. Jovan asked the question, should the employees provided by related parties also be included? Should we be included in the headcount if they only provide support function and are not engaged in the core income generating activities? I would say no, because outsourcing only relates to core income generating activities. If you rely on outsourcing to demonstrate substance, so any kind of support functions, you can outsource that, but you don't need to report that for ESR purposes. Then Farhan asked the question whether there's an option to revise or rectify information submitted through the notification of the report. There is an option. Let's say you submitted your notification. There will be a button next to it to request for an amendment. The thing with that is that the regulatory authority has to approve that amendment first. You also need to explain exactly what you want to amend. The same is also possible for the ESR report once you've submitted it. So here we're going through the ESR reports. I believe this section on the reportable period, once you've filled in the notification, it will be automatically filled as well in the reports. As I mentioned, keep in mind that the filing deadline is 31st of December and you are reporting in respect of financial year 2020. So the start dates of your reportable period should be 1st of January 2020 and the end date should be 31st of December 2020 as well. So keep that in mind when you file towards the end of this month. Here under this section, you need to confirm whether the information that you provided, if it's different from the information in the ESR notification, yes or no. If you amend any of the pre-completed information, so that was already there when you open the report, then you have to select yes here. For example, if there was a change in the office address or the reportable period. Then here on the financial information, the first question is, are there audited financial statements available? You have to indicate yes if there are standalone or consolidated financial statements available at a group level. So either standalone or at a group level, if you have audited financials, you have to indicate yes. Then for the currency, you need to basically indicate in what currency do you want to provide the information in the ESR report. So it does not refer to the currency in which your financial statements are drafted. Then total standalone revenue of the licensee. This is basically your first line in your income statement. Accounting profit or loss as per the standalone financial statement. What we sometimes see is people provide the profit or loss on a group level. So it has to be standalone for the licensee. So if you're reporting for a branch, don't provide the consolidated income of the head office and the branch or other branches outside of the UAE. It needs to be standalone. On the net book value of the tangible assets, what would you typically include there? Any kind of premises, furniture, excluding cash in bank. You can include inventory as well to the extent that it's held in the UAE. And sometimes assets like furniture, they are already depreciated. So it's possible that your net book value is zero according to your financial statements. Then under section F, you need to indicate the relevant activity, again, carried out by the licensee. One mistake that we commonly see is that people check the wrong box, especially for lease finance business or distribution or service center business. And the reason for that is very simple, because they're right next to each other. And it's a bit confusing in the way that they've included the two terms, because both of these relevant activities, they have two subcategories, either a leasing business, a financing business, distribution business, or a service center business. Then under question 3, you need to confirm if there's a difference between the reported relevant activities in your ESR reports and whatever you reported in the notification. It could be, for example, that throughout the middle of the year, you start charging management fees to a related entity outside of the UAE. In that case, you're suddenly a service center where, for example, under the notification, you were only a distribution center. So these kind of changes are possible, and you need to indicate them here under question 3. And then on the outsourcing, I had a few questions on that already. You need to confirm whether you've entered into any agreements with an outsourcing provider. And as I mentioned, it can be a related party or a third party as well. Then, and this is, I think, the most difficult section of each ESR report. So first, there's a general section for all relevant activities. Well, after you've completed that, there's also a specific section for each relevant activity that you indicated. Today, we took the example of a service center business, but know that the reports sometimes vary slightly in terms of the information that you need to provide if you select any other activities. For example, if you would have selected here distribution center, then you'd have to provide the cost of goods sold as well. So here you provide the relevant income. Again, can change per relevant activity. For a service center, it's essentially whatever the amount of income is. that you've provided to related entities outside of the UAE. So if you have a related party in the UK, you charge any services to that entity. It's basically the amount of whatever amount you've charged or invoiced to that entity. So what would you typically exclude for a service center business? Any services that are rendered locally, either to related parties or to third parties, and also services rendered to third parties which are outside of the UAE. In terms of the operational expenditure, they ask you specifically for the OPEX in relation to your relevant activity. So if you carry out non-relevant activities or other relevant activities, you'll have to apportion your OPEX accordingly. So don't put 100% of your OPEX for this relevant activity, and then if you have a second one, again, put the entire amount. You need to come up with a practical way to sort of apportion that between different activities. And the average number of full-time employees, again, if you carry out multiple activities, make sure that you apportion the total number of FTEs to each activity. Here you also need to provide a description of the core income generating activities under 4. What else do we have? Expenditure incurred on outsourcing. So if you do rely on outsourcing to carry out some of your SIGA, you need to indicate that here, what's the amount of expenditure, total accounting profit or loss, specifically for the service center business. So how are you going to calculate that? It's essentially, if I go back here to the previous slide, it's the amount that's reported under 1 minus the amount under 2. So your gross income minus your operational expenditure. Yes, Jovan, it's only relevant outsourcing for core income generating activities. For outsourcing, for support functions or non-core income generating activities, it's not relevant. And then finally, we also have to provide here income from third parties, if it's relevant. And then finally, the ownership information. Again, we'll have to provide information on the parent entity, the ultimate parent entity, and the UBOs. And then when we're on the topic of outsourcing, if you do have an outsourcing provider, on this section, you'll have to provide the details of each outsourcing provider. So if you have multiple, you'll have to add, under question 1, the appropriate number of outsourcing providers. And as you can see, it's quite extensive, the information that you have to provide. Why is that? Because the legislation says if you do rely on outsourcing, you need to demonstrate that you have a high degree of control over the outsourcing that is going on with either a third party or a related party who's providing those kind of services to you. One of the recommendations as well is to enter into outsourcing arrangements. So formal contracts, if you have those, you can also submit those as supporting documents that you did meet the economic substance test, for example. This is still on the outsourcing provider. For example, you have to indicate how many FTEs does the outsourcing provider use. Then the directed and managed test, I've discussed that in great detail, but essentially here you have to indicate that you meet all these requirements, that there was an adequate number of board meetings. There's no specific number again, so you can take the position that at least one should be held in the UAE. As I mentioned, you can have multiple meetings as well. Some of those could be outside of the UAE. And then finally, there's the declaration where you confirm that as a licensee, you have sufficient or adequate employees, expenditure, and physical assets or premises. So this is like a substance declaration, sort of summarizes the report. And then finally here under 3, you declare that you've met the directed and managed test as well. If you answer no to any of these questions, it goes without saying that you're not going to meet the economic substance test, right? And then finally, we have to provide a copy of the standalone financial statements, which we've done here. And then under 7, you have to declare that the information that you've provided is correct and valid. Under 5 here, you can provide supporting documents. What could that be, for example? One thing that we regularly get asked from the regulatory authorities is proof of relevant income, so invoices, bank statements, flight tickets, for example, to support that there were indeed board meetings held in the UAE and that the director was physically in the UAE when the strategic decisions were taken. A copy of the meeting minutes, but as I mentioned, there's a confidential aspect to that as well. There's a question here on the UBOs. Is it exclusive for shareholders holding 25% or more? Or can we also apply the senior managing official? It's a very good question from Mary Chris. As you know, there's UBO legislation that came out last year as well. As a general recommendation, we advise companies to align their ESR reporting as much as possible with these UBO filings. There's one difference though for listed companies, and so companies that are traded publicly. There is an exemption in the UBO law, but we don't see the same exception for ESR purposes. So there's a bit of a discrepancy there. And to very specifically answer your question, Mary, where there is a person who has 25% or more, you need to identify that person. If there is no shareholder that has 25% or more of the shares in the company, then you indeed need to fall back on the senior managing official criterion. So essentially that means the person who is allowed to control the entity or who is mentioned on the trade license. For example, the general manager will have to provide his details. So a lot of reports that we see, companies are not providing any UBOs because there's no person who holds 25% or more of the company. But still you have to fall back on that second criteria, namely the senior managing official, and provide the details of that person. Ruella, your question is, can we submit the economic substance report without audited financial statements because it's still under process? Yes, it's possible. You can basically prepare sort of a mini P&L as a standalone financial statements for the licensee and then submit that. All right. There's one more question on the reporting. What's the step after submitting the report? Do you receive a notification or a certificate? Essentially, you're going to receive a confirmation with the same code similar to the one that you receive when you file the ESR notification. You will also receive an email on the address that is registered under the account. So you will indeed receive a confirmation, and then finally, you should also see it show up in the ESR dashboard. I'll just quickly run you through the appeal process in the interest of time, and then I'll have a look at the remaining questions as well. So let's say you reported late or you forgot to submit your ESR reports and a penalty got imposed by the FTA. It will then show up in your ESR portal, and you will then have two options. Either you'll pay the penalty or you can submit an appeal against it. But you can only appeal in very limited circumstances. So essentially the three instances that I've listed here on the slides, if, for example, there was no violation, which basically means that you consider that the FTA imposed the penalty in error, or if you feel like the penalty is not proportional to the violation that was committed, or if the penalty exceeds the time limit prescribed as per the law. So there are certain time limits in which the FTA has to impose the penalty. If they go beyond that, you have a right to appeal against that. So at this point in time, it seems that the federal tax procedure law is not going to be applicable to these kind of appeals, and it's a separate process. And if you receive an assessment from the FTA in respect of VAT or excise tax. How do you file an appeal? So again, it's through the ESR portal. For each violation or for each penalty that you have, you can file an appeal. The deadline for that is 40 working days after the penalty was imposed by the FTA. So either you file an appeal within that period or you pay the penalty. Once you have lodged an appeal with the FTA, the payment of the penalties will be suspended pending the appeal. So until there's an outcome, either you reject the appeal or the FTA approves it or rejects it. So this is how you can file the appeal. You can provide a brief explanation there. You can upload up to 10 separate pieces of supporting documents. And then again, you'll receive an acknowledgement of the submission, and you'll also see the status updated in the ESR portal. Then finally, in terms of how the procedure goes, either the FTA may come back to you, ask for more documents or information, and there's a total duration of 45 days until you will get a maximum duration, I would say, until you get a response to your appeal. So the FTA has 40 days to take a decision and then 5 days to inform the licensee thereof. It's possible to follow up with the FTA via the dedicated ESR email address. And the last note on ESR audits, as we've mentioned in the last few months, there's been an increasing activity from the FTA in terms of conducting these kind of audits. So what will usually happen, if indeed an audit has been announced, you will receive a notification with the relevant case number, usually accompanied with a very extensive list of documents that they ask you to provide. And as a licensee, you only have a very short window to respond to each of the requests for information. Usually it's around 5 working days, which is not a lot. And again, all documents have to be provided through the ESR portal, a bit similar to the appeal procedure as well. I've listed here some of the examples of the documents that are requested. I'll not go through them in detail. You can have a look as well. Once the video shows up on YouTube, you can have a more detailed overview there. But essentially, our recommendation is to have all of this information on hand, even before an audit is announced. So if you still have to start drafting or collecting this information when they announce an audit, it's usually too late already, because I've mentioned it's a very short window to provide the information. So the message is really to anticipate and to act proactively in terms of these ESR audits. And then finally, regulatory authority interactions. As a basic rule, what you will do as part of your ESR reports and your notification is you'll submit that directly to the regulatory authorities, who will then pass on that information to the federal tax authorities. One of the competencies of the free zones and the regulatory authorities is to review also the exempt status. When you claim an exemption, it will be reviewed by the regulatory authorities first and foremost. So what we've seen happen is that the authorities, they compare current submissions with previous submissions. They check for any changes in the relevant activity, or for example, in the relevant activity, but also the UBOs, the financials are compared as well. What we see is a different approach as well between the different regulatory authorities. Some are more strict in terms of the filings. They request for more information. As I mentioned, if you want to make an amendment, you have to request for that amendment to be approved by the regulatory authority. Sometimes we see that certain regulatory authorities are very fast to approve that, and there are others that take a bit more time. But that has a bit of an impact, obviously, because you cannot do anything as long as that request is pending. So if you're requesting for an amendment, it needs to be approved first before you can do something. Some of these ESR exemptions as well, they are already approved. So we see exempt statuses being granted by the regulatory authorities as well. As I mentioned, if you want to remove a submission or amend it, you'll have to do that through your regulatory authority. So don't go to the FTA, don't contact the FTA for any submissions. Their only role is to assess whether you have sufficient substance. So as long as it has to do with the ESR portal, you usually have to correspond directly with your regulatory authority. And then the final slide before we can move on to the Q&A is regarding a very recent update. So there was a permanent ESR committee that was implemented or incorporated. And the role of this committee is to sort of supervise the implementation of the ESR obligations in the UAE. So basically, the committee will oversee the regulatory authorities and act as a sort of intermediary between the different authorities that are involved with ESR, which are the FTA, the Ministry of Finance, and the regulatory authorities. There's 38 members. So representatives from the free zones, the financial free zones, the central bank and the insurance authority, and their goal or their purpose is going to be to liaise with the Ministry of Finance and to also sit in meetings with the OECD and the Code of Conduct group. So some of the common reporting errors, most of them I've already mentioned when we were going through the ESR notification and the ESR report. So I will leave that to you to have a closer look at later, so we can move on to some of the questions that are in the chat at the moment. Suman, your question is, if we have the book value of assets 0, can we say that adequate physical assets as per the ESR tests are met? I would say yes, but it depends. Again, for ESR, it always depends on the facts. So you can have assets, while at the same time your net book value could be 0, which is the situation that I referred to. If your assets are all depreciated, you can still have, for example, office furniture, you can have laptops, computers, and still perform a relevant activity without those assets having any net book value. Diana, you said, do holding companies have to hold board meetings having their members physically present in the UAE since they have reduced economic substance requirements? So the only requirements for holding companies is to have adequate amount of employees and assets to carry out the holding company business and to comply with the UAE regulations. So there's no directed and managed test that needs to be met for holding companies. Someone asked if a rep office of a foreign company is required to file an ESR notification. I will say it depends a bit on how the rep office is funded. So usually we do consider that a rep office carries out a relevant activity, but of course it doesn't generate income unless, for example, it would recharge its expenses to the head office. And for example, that goes through your P&L or it's reported in your VAT return. Then I would say that it does receive relevant income. And in such a case, you would fall fully in scope of the ESR. But to answer your question, yes, I would say that in any case, they would have to file an ESR notification to be on the safe side. Does anyone else have any other questions before we close off? I know I missed some of the questions while we were going through the presentation. So feel free to post them here if you want. Liju, your question, I think you've not given me enough information to answer your question, because are these services, these marketing services and support services, are they provided to related entities or to third parties? Tanvi, your question, what do you mean with FGC? Is it foreign related party or that you mean, or? Nirav, your question is what would be the income from a distribution business? It's essentially the revenue that you generate from selling goods that you bought from a related party. Shweta, yeah, you need to meet all the components of the economic substance test. So the 5 criteria need to be fulfilled for you to meet the economic substance test. Liju, if they're related entities, then for sure you would be in scope as a service center. Hashmukh, right, to answer your question, if a holding company invests funds in deposits and receives interest, is it considered to have more than one activity? It's a good question. You would have to see whether it would also not qualify as an investment fund potentially, for which there is an exemption. It really depends on the activity of the company. Is it doing anything beyond these investments and holding shares? Mohammed, so you asked, how is the FTA reacting if foreign directors can still not come to the UAE for board meetings due to COVID-19, or have a senior director based here to take strategic decisions? Routine business is going on through the local manager as per the trade license. There's a few things there, right? So you have that COVID-19 notice, which provides a bit of a relaxation on the directed unmanaged tests. It's worth checking whether you can rely on that. Otherwise, I would consider also maybe giving a power of attorney to the local manager so that he can take strategic decisions on behalf of the directors which are not physically in the UAE. Munira, it's a good question. So your question is, if a UAE-based company recharges admin and other expenses to other group entities, will it be covered under the service center business? There's a few things there, right? So service center business, they haven't qualified what constitutes a service for ESR purposes. There is a relevant activity guide, which is an annex to the ministerial decision. And I think there's an exemption for one-off recharges, right? But that means that if you're doing that on a regular basis, so if it's not one-off, that you would likely be in scope of a service center business. Someone asked the question is whether we've seen any cases where a company did not notify and they were caught by the relevant authority. It's definitely possible. For example, if you have a UAE entity and you provide services to a related party outside of the UAE, in your VAT return, that would be zero-rated export of services. It's very easy for the FTA to see that, and they might look closer into it and wonder why you haven't submitted your notification. Tanvi asked the question, do we need to consider the shareholding structure at the end of the year to determine the foreign connected persons? Or do we need to look at it when the transaction takes place? That's a good question, actually. I don't think there's a clear answer on that because you're reporting, of course, for the entire period. So I would think that even if on 31st of December, you're no longer a related party, but throughout the year you were, that you would still have to report that, and you would still, for example, be in scope of relevant activities. So I think you have to take the whole period into account. All right, we've gone slightly over time, for which I apologize. There was a lot of slides to get through. I hope it was useful, today's webinar. If there's any other questions, feel free to contact me on LinkedIn as well. I'm always happy to discuss. And thank you all very much for joining today's webinar. Keep an eye open for our future webinars. We regularly organize these kind of trainings for all kinds of things tax related. Subscribe to our YouTube channel if you want to have a rewatch of this particular webinar. And for the time being, I'll sign off. And I wish you all a great weekend ahead. For the time being, one of the last ones that will be on Friday and Thursday. As from next year, we might see some changes in that regard. Thank you all and have a great day. Thank you.